Okay, so thank you for attending tonight. Tonight we will be speaking on strategies for maximizing tax deductions. So I appreciate your time and energy. And if at any point you have any questions or concerns, please let me know, and I can stop and answer them as we go through the presentation. I know that taxes can be somewhat complicated, especially with the law changing every year. So while it's relevant, if you have any questions, just let me know. Okay. I am Christina Lynch, and I am the instructor for tonight. My background is in accounting, finance, and HR. I have all 3 degrees from Florida State University, and then a master's in HR and employment relations from Penn State. I have about 13 years of experience in accounting and human resources, 9 of those being in consulting with small businesses and entrepreneurs. I am the accounting and HR expert for the Small Business Development Center and the Business Empowerment Director for Capital City Chamber of Commerce. So I hope that I can answer your questions, but I'm extremely passionate about working with entrepreneurs and small businesses. And on top of that, I'm also an herbalist. So definitely have a love for plants and for local foods and produce. And then moving on, tonight we will speaking about financial management. So we'll get into a preview of bookkeeping and taxes, and then transition to the tax deductions for farmers, and just things to consider and things that can help you in maximizing deductions if that is your focus. So about the program, the Frenchtown Neighborhood Improvement Association has a grant from the USDA for the Farmers Promotion Program. And the idea is to help develop local food micro enterprises amongst disadvantaged populations. So this is a free program to anyone that wants to be involved in the Big Bend area. And the idea is to provide knowledge on accounting, marketing, and finances for businesses, but also assisting with value-added production, value-added products, and assistance with connecting local farmers to disadvantaged communities. As we continue on, we've had several workshops, but please know that in the next few weeks, in April of 2023, we'll be doing a series on marketing, advertising, and selling. And then in May, June, and July of 2023, we have free ServeSafe training opportunities. So if you haven't checked that out, please check us on Facebook, join the email list. And I believe we've also added it to the FNIA website, so that you'll see that on the calendar as well. So we have a lot of great offerings that are continuing, and you'll see more program offerings in the upcoming few months. So moving on to financial management, I always like to start talking about the tax portion with effective bookkeeping. Very commonly asked, in tax season, how can I lower my tax liability? So I know no one enjoys the process of paying taxes. However, I always have to say the same thing, and that's you have to look at what's happening throughout the year. If you ask, how can I save money on taxes after the tax year has passed? Well, our efforts, we're trying to change the result of a period that we've already passed or, has ended. So the idea is with tax strategy is we want to plan for it, meaning we look at the upcoming year, we have mid-year check-ins, and then by the time you get to the subsequent year for tax season, you've already had a plan in place for the prior year. So asking in March or April of 2023, how can I help lower my liability for 2022? Well, the tax year's already done. So we want to talk about bookkeeping just as a way of being able to keep our finger on the pulse of how we're doing financially, and also adjusting our mindset to knowing not just how to most benefit financially throughout the year from a profit standpoint, but what strategies can we put in place to meet your financial goals, regardless of what they are? So with bookkeeping, it's really organizing our data. So we want to record and classify all of our transactions, so that way we know where is our money going, where are we earning that revenue, and then using those appropriate categories in order to produce clear financial statements. So when we think about the rules of accounting, it's like categorizing consistently. That way we can really know how much am I spending on seeds? How much am I spending on leasing equipment? How much do I need? Am I spending on, if it's amendments or whatever the case is, whatever your raw materials are, if you're creating products. But consistent classification helps us to know where our money is going, and also where is our money coming from, so we can ensure that our energy is going appropriately in the right places. And then we also want to consider the due diligence that we owe ourselves. So in the past presentation, we spoke about business planning, but thinking about you are your biggest investor. So even if you receive funding from a financial institution or an investor or family members or whomever, you are putting all of your time and energy into the business. So you owe it to yourself to ensure that you're educating yourself at least on where your funds are where your source of revenue is coming from, and then also where's your money going. So making sure that all the funds you receive and spend are yours. We put a lot of trust in the banks, and the banks do a great job at managing that. However, we're now in a digital age where it's a lot easier for our identity to be stolen and our bank account or credit card information to be compromised. So we want to keep that in mind, and ensuring that not only are we managing our bookkeeping, but also that we're reconciling and verifying that all the transactions that you have are yours, okay? In the business world, I want to say it's 3 days, but it might even be as short as 24 hours that you have to notify the bank if a transaction is not yours. So that due diligence is critical to make sure that you're monitoring your bank accounts. Credit cards usually have more lenient rules, but validating like all those transactions are yours. And it's happened to me where I would love to say that I purchased furniture in Brazil, but unfortunately I wasn't in Brazil at the time. And I was able to catch fraudulent transactions on my credit card because of that. And then we want to make sure that we provide a foundation for our business as well. So that's important. Okay, apologies for that. Okay, so the importance of bookkeeping is, one, we want to monitor the progress of your farming business, knowing, where you're earning, not just from month to month, but also year to year. So there's times when we can say, oh man, we can tell from cash flow, okay, it's a slower year, we're not making as much money, but maybe we're noticing that there's a crop or a certain product that's selling more than others, where we can shift our energy. When you're able to look at the data, you can shift and be more flexible in a quicker fashion versus if we're looking at it after the fact. And we want to be able to prepare financial statements to know what our performance is, identifying the source of the receipts, and then keeping track of deductible expenses. Give me 1 second, I'm sorry. I'm sorry about that. And then we want to be able to use that bookkeeping information to prepare our tax returns. So when we have that information up front, we're able to anticipate what the result will be for our taxes. It's also, I understand that it's like throughout the year, we want to make money. It's all about making a profit. And then we get the tax season, and it's like, oh my gosh, I don't want to pay. But when we have that bookkeeping system in place, we can then make strategic decisions to see if you did have a great year, is there equipment you can invest in? If there's things that you need to purchase, maybe we shift the timing of it to where it can financially benefit you. Or are we able to adjust our current habits to be able to maximize deductions, to be able to qualify your return to where you want it to be? One thing that I will say that I have identified throughout the years is that tax planning is not only about reducing your tax liability. So sometimes it's also about looking at what are your goals for the next 3 to 4 years. If you are in a position and you know you want to receive financing, or let's say that you know that you want to purchase a home and you have a single member LLC, we know that as a self-employed individual, the bank is going to look at what is your income to qualify you for what amount they're going to lend you. As a result, driving your net income down or driving your taxable income down is going to hurt you if you know you're trying to go for a certain amount for a loan, for a business loan or a home or equipment purchase. So tax planning isn't about just not paying taxes. It's truly about looking at what are my goals and then where do I need to be in order to meet those goals. So keeping that in mind when we think about tax strategies, I know this is for maximizing deductions, but overall, if we know that we have something that we want to purchase in the next 2, 3, 4 years, the bank or financial institution normally looks at least 2 years of your returns plus interim financial statements. And then we want to be able to use bookkeeping to support items reported on the tax returns. So in the event you were to be audited, or depending if you ever had to be able to prove those goals, you want to be able to look at the supporting documentation to prove what you want. Hey, Robin, did you have a question?
No, am I?
Okay.
Need to.
Oh, no worries, no worries. I'm gonna mute you. Just want to give you a heads up because I think I could hear myself echoing.
Myself, there you
go. Okay. So when we think about the tax preparation, we want to be able to review throughout the year for tax reporting. So we want to reduce overall income, increase the number of tax deductions, and then also take advantage of tax credits. So looking at where are we currently and what are your financial goals, and then working towards that. So thinking about the tax reporting, and when you're going to your preparer, depending on your relationship with your tax preparer, or if it's yourself or your accountant, they only know as much as you tell them. So if you don't have someone that you work with throughout the year, if you were to then go to someone to prepare your taxes, they're truly relying on the information that you provide at that time. So what information can you compile to make it easier for them? I always say, it's great to have a consultant or someone, even if you just met with them once or twice a year, to say, hey, this is where I am, this is where I'm trying to go. If you work with that tax person, it helps them also to give you some insight and advice on things that you can do to be able to meet those goals and make sure that it's reflected on the tax return. So some things that we want to consider with maximizing tax deductions. Remember, this is to help lower our taxable income, which may mean that it's not, depending on what your goal is and where you are in your business, you may or may not take advantage of that. But the idea is that we want to ensure that for all of what you're currently doing, that you are reporting all of those deductions and all of those expenses appropriately on your return. A lot of time folks leave money on the table because if you don't have an accounting system or a bookkeeping system throughout the year, you're compiling receipts or you forgot about this receipt or that receipt. So there's simple things that we can do that take time, honestly, even for myself as a tax professional. It took me years to kind of make these gentle shifts to make it make more sense. So like making sure I have a business account, making sure that, even though cash is easy, it's harder to trace, especially with these receipts that fade away in 3 months. So either scanning in my receipts, and my staff can attest to that, where we're so backlogged in scanning, but we really take it, keeping receipts seriously, or being able to look at, hold on, I'm sorry, one second. Okay, I apologize. They are giving me a run for my money tonight. So looking at things that we can do, like creating that bank account, If we're investing in equipment, are you documenting those payments that you're making to lease? Are you using your personal vehicle to travel for business, or using it to run errands? And are you capturing the mileage? So what things are you currently doing in operating your business to be able to then turn around and report it accurately, so that way we're not leaving money on the table? So some things that we can do are, if you have supplies, and let's say you purchase supplies in January every year, but that you had a really great year in the prior year, are there things that you can pay for in advance to help you lower your taxable income for that particular tax year? So prepaying for supplies or livestock feed, thinking about all the labor that you may pay if you have assistants on the farm. So I know that if you have someone that you're paying that's not an employee, but it's an independent contractor, if they earn more than $600, you're supposed to file a 1099 to the IRS to be able to document that income. But a lot of times, you may pay them out of pocket, pay them in cash, and you're like, oh, I didn't keep track of that. But those are tax deductions that you could have claimed that if you're not documenting that accordingly. So just having a system to be able to document who you're paying and how much, that way you can claim the labor on your tax return. Let's think about the repairs and maintenance, not just, if you're paying yourself, are you able to document the tools or that you're purchasing to be able to fix it, or whoever you're paying to be able to fix the equipment that you have? And I'm going to jump the gun, and I know I am, but one thing that we can also consider is if you have a home office or a space that if you're working in, there's a percentage of square footage from the business versus the home you can write off. Robin, did you have a question?
Yes, sorry about that. Yes, I do have a question. Is there I know you're giving great guidance and great information, in this webinar or this series right now. Is there something else that will tell you how to set up a small urban farming business? Just one book, a simple starter kit for people who are just getting started, to just a basic setup. As years go by, there are some people that are already doing it, but for myself, I would need to start from scratch. I wouldn't know the first thing to capture, keep, or I end up keeping it all, or not doing not doing the things I need to do during the course of the year. If I were to even get started like right now, I wouldn't know what I should be capturing mileage wise, or how to portion off my house or what I could portion off to use as a write off on the business. Is there anything out there?
Honestly, I am not sure of it. I know Brittany's on the Zoom. Brittany, can you make a note so that way we can check into that? The tough thing about taxes is that technically the tax law changes every year. So there may not be guidance specific to tax.
And even as far as taxes, just getting started.
Okay. I will make a note and see if I can find anything. I'm not familiar with any specific book or resource. I'm sure there's something out there. But I also plug in that through this program for this year, next year, free business consulting is part of it. So you are able to schedule time, and then I can also help you with that as well.
Okay, thank you.
No problem.
That's all I have.
Okay. So with the repairs and maintenance, as I was mentioning, this percentage of square footage from business square footage versus the entire home, you could write off. So that's if you itemize and you claim itemized, it wouldn't count. But if you're standard deduction, that's property taxes, interest, repairs and maintenance of the home, your security system, everything home related that's related to the home office, the percent of that can be written off. Thinking about breeding feeds, fertilizer, or amendments, tenant housing expenses. So if you are providing temporary or permanent housing to anyone assisting you with the farm, that can be written off as well. And then capital expenses are like your major equipment. So things that you may have purchased. So if you purchase like a tractor, for instance, that's an asset that we would want to claim on the tax return, and then we can depreciate that over X amount of years. So the gentle shifts when you're thinking about the things that you can write off, like my goal is always to say, what are you currently spending? And then making sure that we're capturing all of that. Or how can we make these shifts in our activities or behavior to ensure that we're maximizing our deductions for things that we're already spending money on, you know? So that's really the notion behind strategy. Not just saying we have extra money, let's blow it so we don't give it to the government, but also looking at, are there things that we're currently doing that we're not documenting or reporting, and we're leaving money on the table that's getting taxed versus appropriately claiming those expenses. But again, keeping in mind that depending on your financial goals, the goal may not be to maximize taxes, but it could just be to make sure that we qualify for financing, or we're just accurately reporting the true performance of the business. Okay, some other expenses that we want to consider: car expenses and mileage. This is kind of like a double hitter, because on one hand, you're supposed to track mileage, but on the other hand, we should also track actual expenses. The current law is you can claim the greater of actual expenses versus mileage. So if you have a vehicle and let's say 40% of the miles driven are business related, you could either deduct the mileage rate times that with X amount of business miles, or 40% of all 40% of all expenses related to the car or vehicle, including gas, licenses, repairs, maintenance, all of the things above. So you kind of have to track both. I was very hesitant, but I use QuickBooks online. They have a mileage app, and essentially they track your location. But then every now and then I'm able to go in and say what's business and personal, and it tracks the mileage for me because it knows when I'm moving and when I stop, when I'm moving and when I stop. So it's a really easy way to do that for me to be able to track the business miles without having to put in a bunch of effort with the mileage log. Something else we can think about is office expenses. So all the pens, the paper, all of those things are things that we want to consider when wanting to deduct. Insurance. So if you have any type of liability insurance, property insurance, things related to the farm, as we should have to protect ourselves, that those are things that we want to deduct. A life insurance, not so much. We can't deduct that. So I know that if you have a single member LLC, or really an S corp, if the benefit is to the person, you can't deduct the life insurance. A business phone bills, if you have a separate business line, you can deduct that. If you do not, and you just have your one phone, which is very common, you can deduct the percent that's business use. So if 20% of your phone usage is related to the business, then you can deduct 20% of the phone bill on your taxes. Education is huge. So that's one that I've noticed with a lot of farmers, herbalists, holistic providers in general. They're not claiming their professional development. So those conferences, the webinars, all of those things are deductible because it's helping you increase your knowledge and skill set for your profession or the product or service in which you're offering. So that is continuing education, professional development. Things to attain accreditation or maintain it are deductible. Business related travel, simplifying it to say that it is deductible. So when you're going to conferences, if you're meeting folks out of town, things of the sort, that's deductible. And then it gets a little convoluted as you dive a little deeper, because like you can have, per diem, that basically have a meal allowance rate per day or actual meals. So I typically go over my budget. So the meal allowance doesn't work for me, but I can have my actual meals written off because of the travel. They even let you write off like your dry cleaning if you're traveling and you have to dry clean something. So there's a lot of different things when you think about traveling. If you're taking a business trip or traveling for a conference, the airfare, the mile, the airfare, if you're driving, the mileage, hotel, foods, all of that stuff is deductible. So if you are able to, it's typically good to have a business credit card, because you know that credit cards have better protection in the case the information is compromised. That way you can track everything, like in having like a business bank account, so you can track all of your expenses. It makes it a lot easier to know what's deductible and not, when you can just separate it from the beginning. Any type of postage, so mailing anything or shipping anything. And then those business meals. So when you're meeting folks for those business discussions and business meals, those are deductible as well. Are there any questions, comments, or concerns so far?
I got a question. So for what we are talking about, we're farming expenses and business expense. I mean, the government doesn't make a distinction between farm related taxes and some other another type of business tax. So it's all under whatever you set up as a home business. I know sometimes there are different rules for farm related things. Is that the case?
So you have like Schedule F, which is like your farm-related expenses. You have like Schedule C, which is like your business. So depending on how you set it up, you may have two schedules for the same activity. But I'm a big proponent of that you have like an LLC and having protection from you as an individual versus your business activity. But it is possible that you could have two separate schedules for the same business, separating administrative and then the direct farming activities.
Okay. Thank you.
No problem. Okay. So for the car expenses and mileage, I mentioned that it's either the mileage rate or actual expenses. So for the standard mileage rate, there are some qualifications. So one, you have to own or lease a vehicle, and then you cannot operate 5 or more vehicles at the same time. So these are also assuming that these are LLCs going on your personal return, just keeping a heads up. You can't claim depreciation method other than straight line depreciation. So that's something that's more so for like tax professionals, where you can't front load depreciation and then turn around and also take like mileage rate. And then, as I mentioned before, you're either taking the mileage rate or actual expenses, whichever is greater. So the IRS does give you the option of doing what's of most benefit to you. And then commuting miles do not count. So if you have, let's say, a farm or urban farm that's not at your residence, the mileage to and from the farm do not count. It's only anything else like deliveries, I don't want to say running errands, but going to the store, everything business related other than commuting counts. And then when we're looking at, actual expenses, sorry about that. Okay, when we're looking at actual expenses, we're thinking about qualified expenses being fuel repairs, tires, insurance, registration fees. Here you can do depreciation, just has to be straight line, all of the things. And then for documentation, because documentation is important, if you're using the standard mileage rate, you want to record the date and mileage for qualified business use, and then actual expenses, you must have your receipts. So there was communication in 2022 that there would be more an increase in efforts to ensure folks are compliant. And there were some articles indicating that folks with LLCs may be targeted just because there is an observation that folks with a single member LLC typically do not have as strong of recording habits as corporations. So keeping documentation is important. So using apps that can help you save receipts, using apps that can help track mileage, make it easier for you also, as you know, as you get started, or if you're already in business, there's so many things to do. So we should utilize technology to make it a little easier. When we're thinking of office expenses, it could be home-based. If you're thinking of a home-based business or freelancers, you can deduct up to $5 per square foot of the home that is for business purposes. Again, we would look at what all the expenses are, and then it would be capped if it was over that amount. But those home-based offices must be exclusively for business use and the principal place for conducting business. So if you have, let's say, an office that was not at home, you could not claim both your physical location and your home office. It's one or the other. And then office supplies that could be written off, really, or anything that's used for business purposes. So printers, papers, pens, computers, work-related software. I am inundated with software subscriptions, but I guess they're deductible, but at the same time, I also need them to work. So all of these things help me in making sure that I identify deductible expenses by keeping them in separate accounts or credit cards than my personal. So it's easy for me to track. And then work-related postage and shipping costs. So just keeping some examples of things in mind that you can deduct. And then we want to think of insurance. If you are not insured, if you are insured, these are the ones that are deductible. If you're not insured, it's something to consider. So as I mentioned, health or life insurance is only deductible if it's for the employees. If you're self-employed, you can deduct health insurance, but the life insurance portion is not. If you're in business and don't have insurance, I normally recommend at least getting liability insurance, just because if anything happens, you want to be protected. And also, it's just a litigious society that we're currently in. So the more protection you can offer your business and yourself will help you in at least having that safety net in the event something happens. Commercial property insurance is typically required if you have customers or buyers on your property. If you don't, then it's not really something that you would need to worry about. But the idea, well, I guess there's a couple ideas. One, you want to be able to protect anyone that may be injured on the property, but also protecting what you have. So that way, if something happens, you're able to replace that without having to save the money yourself. And then workers' compensation would only be relevant in the state of Florida if you have more than 4 employees. If you don't, you're not required to get workers' comp insurance. So for business phone and internet bills, I don't know about you, but if I didn't have internet, I probably, if I didn't have internet, I wouldn't be able to work. So my justification is business related, right? But if you're one that you're only on the phone or internet, because when it's work related, they are deductible. If not, then the per business percent is deductible. And then you must have records of invoices. So typically providers make that pretty simple to log in and get it. But one thing that I will state with business bank accounts or bank accounts in general, and with some of these vendors, they only let you go back X amount of years. So if you know that you could be possibly audited in the past 7 years and the bank only allows you to go back 2 years in statements, you'll want to keep a habit of being able to save the documentation. That way you're able to have it in the event that you're audited or need to provide proof of your totals. I mentioned before, professional development is one that is greatly underreported, but any type of educational expense that brings value to the business. So if you're learning a new technique, learning a new method, gaining additional knowledge, these are all things that you can write off, and I highly recommend that you do. But it must be able to improve your skills or help maintain your professional expertise. So keep those invoices and statements and please write them off, because that is one area of opportunity that I see left on the table all the time. For business related travel, the qualifications must be necessary to the business. So if you know that you're going to sharpen your skills at a conference that's just so happened in Vegas, it's not by accident that the conferences rotate every year. But in all seriousness, it must be business related and be in a different area than your business. So, me traveling downtown to get a hotel wouldn't count if it's in the same city. But if it's outside of the area that I typically an area that I typically do business, then it does count as travel expenses. We want to be able to travel. You must be able, or it's travel related. Sorry, when it's longer than the normal workday, and then doing an activity that's a business activity that's for the majority of the travels. So if you're going to the conference for 4 days, and let's say that half a day you spent doing something leisurely, the travel would still be business related. So, I noticed that a lot of folks do the whole conference tours where they go to different cities and they spend a small amount of time doing something or, piquing their interest in something. But then, the majority of the time it's still business related. So they're able to write off the trip. But we want to make sure that we keep receipts. And then for those meals, you can generally use the standard meal allowance instead of receipts. So if you're not good at keeping receipts, especially when traveling, you can use the standard meal allowance instead. So for eligible meals, for business meals, we want to make sure that it is business related. And I see here is the wrong information, but making sure that the majority of the time spent with when you're at the meal or with someone, that it is business related. And you must document the date and location of the meal, which is typically on the receipt, and then the business relation of the person or people that you dined with if you went with someone there. So it's things that are already on the receipt. It's just more so adding the name of the person you're with and why you went to lunch or dinner with them or breakfast. And then other deductions that we want to consider: business interest and bank fees. Although it pains us all to see those business interest and bank fees, they are still deductible if you must pay for it. All the depreciation, and amortization, depending on the investment in the business, the capital expense, whether it's like startup costs that you couldn't deduct in 1 year, or if you're purchasing equipment, professional service fees. So the tax preparer, your accountant, your lawyer, all of those expenses are deductible. Any salaries and benefits that are paid to folks. Although with LLCs, charitable contributions do not go on the Schedule C or the Schedule F for the business, it can be part of your itemized deductions if you are a single member LLC. So we still want to be able to identify when we're making contributions so we can gain that tax benefit. Some other things to consider: I put child and dependent care because I know a lot of entrepreneurs, if you have children and you're paying the additional fee for dependent or child care, those are things that we want to document as well. So again, even though it's not business related, sometimes for some folks, it is an expense that becomes necessary and due to lack of time or organization isn't captured. So just considering all the things that you're currently doing that you're able to deduct. Any types of energy efficiency that is invested into the business operations or your personal home, those might be deductible as well. And then thinking about your typical deductions as a taxpayer as a whole. So your real estate taxes, if you own the property or if you own your home, if you have that home office, as I mentioned before, real estate taxes, mortgage interest, all of those things could be deductible. Retirement contributions. So if you had a really great year and you're looking for possible deductions, and maybe having the traditional IRA could help you in reducing taxable income. So typically after a certain threshold, you start seeking deductions because you made the money and you're like, well, I'm going to have to pay taxes one way or another. Are there things that I can do to reduce that amount? So having like an IRA could help with doing that. I know typically in HSA you have to be with an employer, but just looking at what are all the options of things that you can put money into that will directly benefit you, but still reduce your taxable income. And then thinking about like advertising or promotions, any type of advertising you're doing, any type of sponsorships that could be beneficial, those business cards that you get, the website that you developed, all of those things should be captured. And then thinking about any type of client gifts. It says employee entertainment, but more so employee welfare. So sometimes it's like recognition for the employees, taking the employees out to lunch. Some folks may just like buy lunch and bring it to with this normal season as a way of celebrating. Robin, did you have a question?
I did. Would sponsoring a little league team be considered advertising or under charitable donation?
That's a great question.
Like they're wearing your shirts with your logo on it.
I will say that most businesses document it as advertising because you're essentially purchasing to advertise through the uniform or the signage.
Okay. But it would have to be either or. It wouldn't be considered like you contributed. I mean, you bought the uniforms for the team, or you bought the shirts at least, and it did have a dollar amount, but your name is on them.
Correct.
So,
correct. Because technically it's like
it's one or the other. Okay.
Right. It's not both.
Okay. All right. Thanks.
No problem. And then the last line item, the startup expenses. So if you are not in business, and let's say your goal is to start the business January 1st of the next year, all of those expenses associated with starting the business before you begin an operation are deductible. So let's say you're looking at, I got to register the business, or, oh, I need to build this website. I need to get this license, this licensure. All by purchasing equipment, meeting with a lawyer or accountant, all of those expenses before you start operating the business are deductible. So if we're in 2023 and you're spending a lot of money to get the business started, next year when you're filing your taxes for 2023, you can claim the startup expenses for your business even if you're not in business. So that is another one that I see left on the table a lot. And I believe it's up to $5,000. I could be wrong. It's either $2,500 to $5,000. You can deduct X amount for upfront, and any amount after the threshold, you can amortize over X period of time. So if you're thinking about starting a business and you haven't yet, and you know for sure, okay, hey, I got the EIN, this will be the business I'm starting, document those expenses. Even though you're not in business yet, they're still eligible to be deducted and can still benefit you for this tax period. So just something to keep in mind, because a lot of people don't know that, but we don't want to leave that on the table. And then most important, consult a tax professional if you are unsure. So as I mentioned in the beginning, the tax law technically changes every year. So that's why we don't file taxes January 1st, because we're typically waiting on the legislation to pass. And then all of the tax softwares have to update their software. The IRS typically opens their window like the third week in January for people to begin filing. But because the law can change technically from year to year. And then on top of that, depending on where you're located, state law can be different from federal law. It's better to have someone that you can check in with, even if it's not every year, depending on where you are, but every few years, just to gain some insight on where you are and if there's anything that you could be doing better. So it can help you in working towards your goals, on whether it's maximizing your deductions and credits, or just trying to gain a perspective or a strategy on where to go. So most tax firms or tax preparations companies, including H&R Block or Jackson Hewitt or all of them, they typically do offer tax cleaning throughout the year. So they'll extend their hours during tax season, but they typically still have hours throughout. So I do recommend just every now and then checking in with someone and seeing if you're doing everything well, if you're doing it yourself, or if you do have someone checking in mid-year to see if there's anything that you can do to better work towards your goals. So with that, I will ask if there are any final comments, questions, or concerns regarding tax strategy or tax preparation. Okay. Well, I just want to say thank you. I sincerely appreciate your flexibility. Since we had to reschedule this, and I know it's a little later than normal. But if you have any comments, questions, or are seeking any type of consultation, please reach out to Audrey. She can schedule a time for us to talk about accounting, finance, or tax. And then we have another consultant that can assist with advertising and marketing.
Thank you very much. This has been very helpful, as usual.
No problem. I appreciate your presence. Oh, it always smiles when I see that you and Becca come. So I appreciate it so much. Your presence. Oh, it always smiles when I see that you and Becca come. I appreciate it. Well, have a great
I
night.
hope everybody's looking at the.
Have a great night.
All right, you too.
Yeah, and I think
Bye-bye.
there are some people that are looking at the YouTube channel as well. So I think they are taking advantage of the recordings, and you know, we're making some great progress.
Okay, great, good deal.
Have a good night.
Have a good night.
All right, thank you.
Have a good night.
Have a good night. Thank you. Have a good night.